What's going on, guys? It's the Bulls and the Bears here with a midweek update video for you today. We're going to talk about a few things. We are going to talk about January 2023, so a monthly recap of January, because Monday and Tuesday of this week, we're still January, and I did some credit spreads those days, open and closed at the very end of January, so technically they are counted as January profits. So I'm going to update where I stood on January on the month. So we're going to talk about that. We're going to talk about what I'm doing with the wheel this week. And we're going to react live to the FOMC meeting at 2 o'clock, which is only in 5 minutes right now. So as you can see with the account really quickly, I'm in an Activision cash secured put. So the quantity is -1 because it's short. I sold it. I collected $60 for it. Right now it's worth about $29. So I am up on the put, as Activision is staying away from my strike of $73. We'll take a look at that. Well, actually, you can see it on the watch list here. It's at $76. This expires Friday. So far so good there. I was in a CVS put that I did close yesterday because I wanted to capture that profit and realize it in the month of January. We'll talk about that when we talk about the monthly recap. And, well, I guess that's really it. This is where the account stands, $25,647.96. This is changing so slightly with this open cash secured put. It's the only position I have open right now. And I am interested in maybe opening a credit spread live for you guys today after the FOMC meeting or the announcement and the volatility is going. Because I didn't really want to open anything before the meeting because who the hell knows what's going to happen. So we're only a few moments away, so we can actually go into the chart here. We'll talk about SPY quick. There we go. We'll talk about SPY quick as we head into this meeting. We'll actually look at SPX. Go to the daily chart here. So here's the daily chart of SPX. Get rid of some of these lines. We do want to hold this this trend line here. We do want to look at that one. So here is SPX on the daily chart. Obviously, this trend line has been holding for a while. We recently broke above it, and heading into this week, also near this major resistance level at 4,100 right there. I was predicting in my weekly recap video that we would see a 1.5% down day between Friday and today. So that would include Monday, Tuesday, and today, Wednesday. I was saying one of these 3 days is going to be a 1.5% down day. And wouldn't you know it, on Monday, we actually went down 1.3%. I was so close. We had a pretty severe gap down and sell off on Monday. It wasn't quite 1.5%, 1.3%. I think I'll take it. That was pretty close. But Tuesday didn't really even matter because Tuesday we recovered all that and then some. So in reality, between Friday and yesterday, we didn't really move. Here was the close of Friday and here was the close of yesterday. So kind of didn't really matter. The price action from Monday and Tuesday didn't really matter. We're back where we were on Friday. And that kind of makes sense because it's all about what's going to happen today in 1 minute. What is the Fed? What is Powell going to do? What are they going to say? That's what's important. So we're going to go to the 1 minute chart. We're going to take a look at SPX right here. This is the 1 day chart. So we opened right here. This is the open on today. This is the 1 minute chart. You can already see we're curling up right now. But obviously this can all change. It's going to get very whippy. I feel like the way things have been going lately, we rip up after the announcement, and then maybe the next day is when we kind of sell off. But we'll see. The market's expecting a 25 basis point increase. That's what everyone's expecting. There's a small chance it's 50. There's a small chance it's 0. But pretty much everyone thinks it's going to be 25, and I think it's going to be 25. You guys will already know what's going on. You already know what the market did. You already know what the Fed did. So I'm not going to really drag this out too long. So I'll probably jump cut throughout the volatility and just give my comments. So, all right, it's 2 o'clock. And voila, look at that. I guarantee you it pops up. I guarantee you this is a Bulls and Bears guarantee that we're going to be trading up here in a matter of minutes. Okay, I'm going to pause and we'll see if I'm right. What did I tell you? There it is. Right in the box. Because that's just what happens. You get one dramatic move initially, and then it reverses, and then I bet it'll come right back down here, around 40.53. something like this in the next few minutes. So, all right, so we're gonna let this marinate. Powell's gonna actually speak at 2:30, so we have some time. I would open a position, preferably a call credit spread. So the more we move up, the better, because that'll get me an even higher strike. But I want to wait until the actual press conference when he speaks. I don't know. We'll see. Depends how much we run up, because him speaking could send us lower. So opening a position before he speaks might actually be a pretty good idea if we run up higher than this. But we're gonna let it wait for now. And in the meantime, we're going to talk about the wheel strategy. So here is the graphic showing all the account details, the total profits, the put premium, all that stuff. But more importantly, the January P&L. This is final. I'm ending January down $992.09. And now, that's not good. You know, no one likes to see that. But I feel great about this because the month started with me closing a ZIM position. We all remember ZIM. If you've been following me for a while, you know damn well about this one. I got assigned somewhere up here initially. I added down here like 21. Actually, I think it was down here at $21, and then I finally got out down here. So this was months and months and months. I was tired of it going down every day, every week. So I finally got rid of it. The fundamentals didn't look good for the full 2023 outlook, looking at the company's reports and all that. So I decided to just get rid of it. And I took a pretty big loss, $1,870 I took. So to go from an initial $1,870 loss on the month and bring it down to less than $1,000, that is a huge win for me. So I'm very happy about that. A lot of it was credit spreads. There were a couple wheel things here and there. I'll actually bring up the Excel file. So here's the data on the month. Not a whole lot of wheel stuff. There was a lot of credit spreads going on, but I kind of took it slow with the wheel. I was in a Tesla position for a while. I was waiting that out, and I was just basically kind of cleaning the slate, getting rid of ZIM, getting rid of a few other positions I had, like VF Corp and Kohl's, which were up here. Got rid of those. I was unwinding those. I was holding a Tesla position for a while. And then once I was finally clean, after a few weeks, my account was completely wiped clean, no open positions anymore. I took it slow from there. Want to ease back into it. I was doing credit spreads in the meantime, but I was waiting for good levels to play for new wheel positions. I was honestly waiting for Tesla to report earnings to see if I could play it again. It rallied like crazy, so I couldn't play it again. And finally this week, or in last week I should say, I was beginning to get the wheel going again. I opened a CVS position. I actually closed that yesterday. So I opened a CVS $87 put. I received $1 for it. I closed it yesterday for $54 and profited $46. The reason I did that was to realize that profit in January to bring my realized P&L to under $1,000 lost. That was really the only reason I closed it so early. And I mean, it's a solid profit nonetheless on a single cash secured put. And then down here is just a lump sum of all the credit spreads I did. This is net fees and commissions. So this is the total realized kept in my pocket profit on credit spreads, $693.66 on the month. So starting up here from $1,870 down, you know, I had a pretty nice Kohl's position get closed for $200. The CVS, a couple puts here, Google, Intel, CVS, that I wanted to a little bit of profit, $50 profit net from these guys. But obviously the bulk of it was the credit spreads. That actually worked out pretty well this month. I'll keep it going as best as I can, picking my spots here and there. But I really do want to focus on the wheel as well. I'm in Activision right now. I was just in CVS, and I'm looking to see if today's volatility is going to allow me to get into something new. Maybe I can reopen CVS if we sell off a little bit in the afternoon. Who knows? But that's where we stand, down $992 on the month, or 3.7%. At a 3.7% red month. So here's the account summary. You can see all the profits from 2022, and then of course January 2023. Finally, a red month. I mean, all through 2022, I was realizing profits month in, month out, but it was a little bit deceiving because I was holding unrealized losses throughout that. I was only counting what I realized, which was all gains, and I wasn't counting what was unrealized, which was losses. Finally, that all came due in January, down $990. My position window was clean. I only have one position, and it's in the green, so there's really there's really nothing being not included per se this time, like there was maybe in prior months. So this is where we stand, up $25,500. I mean, I'm happy with that. A red month will happen. Now we just got to chip away month after month, just like we did in 2022, put after put, nickel and diming my way here and there, week after week, and just slowly realizing those profits and getting a steady grind to the road to 100,000, which is what I'm trying to do over here. Here's the graph. Took a little dip in January. Obviously, we just talked about that. We'll look to see that turn around for February, and then for the rest of the year, maybe another steady uptrend there. I would like to see some exponential growth. As the account gets bigger, I can take more puts or play with bigger names and therefore bigger profits, which leads to more money in the account, more puts, bigger names, bigger profits, So follow that trend, exponential growth. Hopefully we start to see this trend steepen to the upside. That would be very nice. But I'm in no severe rush. Slow and steady wins the race. This is not a marathon. As long as I can do this consistently, that's all that matters. I'm young. I plan to do this for a long time, for longer than I've already been alive. So I got plenty of time. Time on my side. So that about wraps up the month of January. We're going into February right now with an Activision put and the potential to open a new one for this week, depending on if things sell off today or not. So let's go check to see how the S&P is doing. All right, so we did dip down. Here was my box that I predicted for it to come back down to. Pretty close. Popping up a little bit now. We'll see if we actually get to my second prediction zone. It's funny how this works. It'll go up, it'll go down. The final direction usually won't be determined until Powell actually has his conference and talks about the economy, about what they're thinking. That'll be at 2:30. We're almost there. So really until then, I'm just going to pause, wait for that to happen, see what the market does, and then look to see if we can open a position maybe for Friday, a credit spread that goes to Friday. Give us some time, give us some distance between the current price and the strikes by adding more time. We'll see what happens. Ideally, I'd like to see this push up. That way I can open a call credit spread, at like 41.30 or something, 41.40. We'll see what happens. But for now, I'm just going to pause. And there's my second price target hit. It's almost like I should have been buying calls and puts throughout this whole thing. Anyway, I got Powell talking in my ear right now. I'm not sure. You guys might be able to hear. I'm going to lower it a little bit. So far, all I've heard in the first minute that's pretty noteworthy is what he's been saying this whole time. They still have work to do. They're still not done with the inflation fight. So that should mean more hikes to come, possibly. We'll see. All right, so I have my trading layout right here. So CVS, I was in a cash secured put at the 87 strike earlier this week. I closed that yesterday so I could realize it in January and lower my my loss on the month. This is right here, the 87 strike that I had. Now CVS is selling off with the market below 87, so seems like smart that I closed it. I'm actually going to open another one for this week. I'm going to sell the 86 strike. I'm going to do it. I like CVS, and now I should be able to get it at a lower strike, sell this put at a lower strike, and I'm in right there. Sold one contract for 47 cents. So now I'm back in CVS just like I was to start the week. Now I'm still in it. However, I'm now at the 86 strike right down here. So if I do get assigned this week, my cost basis would be 85.53. 85.53. Had I not closed my prior put that I had this week, and I did get assigned, my cost basis would be at 86. So I closed it yesterday. I'm reopening one at a lower strike. If I get assigned, I'll be at a better break even than I would have in the prior. If not, I keep the $47 profit for the week, and I'm happy with that. So boom, back in CVS at the 86 strike. We'll go back to SPX now to see if I'm going to be doing any credit spread. So now we're popping up here. I gotta see what Powell's saying. I muted him for a second. We are getting a massive spike here. I'm gonna try to sell a credit spread for $1 though. I need $1. All right, so Powell's done. He's gonna be trying to answer questions now. I'm trying to sell a spread at the 41.50 strike for $1 premium, and I just got in there. This is for Friday. And I only sold one of them. Usually if I go a couple days out, I try to grab a couple contracts, but I honestly wasn't even thinking. But we'll see. We'll work with it. Okay, so let's scrunch this axis down a little bit. Yeah, there it is. All right, so I need SPX to stay below 41.50 by Friday. So another hour and a half today, and then Thursday and Friday. That's the trade I have on right now. I only took one lot, so I collected $100 total. Stand to make 100 max, probably cut it at 50%, so $50. But it's a couple days out, and if I feel convicted about this trade, and I kind of do because I'm at the 41.50 strike, I think that's pretty damn good. I mean, that's over this strong resistance at 4100. We have another little pivot at like 4125. So I think that's a pretty safe area, but you never know. We're in some volatile times right now. So I'm just going to take it light right now with one contract. If we do push up higher, I'll probably decide to load into more call spreads at a higher level, maybe 4,200. That is when I would maybe take several contracts, 3 to 5. But for now, we'll just start with the one. And who knows, if we roll over the rest of the day today after this little pop, maybe I just close it today. We'll see. But all right, that's it. Let's go take a look at our positions. All right, so here's where we stand. We have CVS back on the watch list as it is back in our positions window. I'm actually already up 27% because CVS is now popping up. I'm just gonna let that ride for the rest of the week though. Activision's looking good still at $76, CVS at 87, and then my vertical spread looks like I'm down. That open P&L is off. The last price is 85, so I should be down $15. It says I'm down $65, but yeah, I'm also up 15%. So when you're looking at the spread details, the bid ask and whatnot, the last price, the midpoint, it's all pretty wonky. So you can't take every little flash of data as fact because it's pretty. You're dealing with two different strikes, two bid asks at the same time. It can get a little weird, but that's for Friday anyway. I need SPX to stay below 41.50. That's the trade I have put on right now. We'll see if I adjust it, and I will let you guys know on our Friday weekly recap video exactly what happened, whether I closed it, opened a new one, or if I'm still holding it or rolled it or whatever. Whatever happens, I will let you guys know later this week. So that's it. An exciting day today. I opened CVS again. I'm in a spread. We saw what happened with S&P 500 chart after the Fed announcement. I called two different price areas and they both got hit because that's just how Fed days are. It goes up, it goes down, it goes up again, and then he speaks and we go one direction, and then he's done speaking and we go another direction the rest of the day. It's comical, but that's just the way it is. So anyway, thank you guys for watching. If you enjoyed, hit the like button, leave a comment down below, subscribe for more content, and as always guys, I will see you all next time.